Hello from Chicago, Alan Knuckman here at the CME Group, high above the trading floor, talking energy with the focus on crude oil. The surge was just shy, so after a $3 rally last week, which is 5%, and a new 3-year plus highs in crude, we could not get back there in this session. Quite, almost there, but not quite. We got within 20 cents, got the high there is 66.46, and we know, because it's an easy number to remember, the all-time high, well, not the all-time high, the multi-year high anyway, is at 66.66. So you saw a drop after that was posted in the evening part of our session. It was straight down, all the way down to about $65, stabilized a bit, did bounce, ended up finishing here at 65.60, which is down 50 cents, so a 1% drop. So what's in the news here? Well, interesting here that we were getting our spread shrinking. Now, the spread between Brent crude and WTI has shrunk to the narrowest it's been in 5 months. Now, that is something that we keep an eye on just to see where the demand part of the equation is. Now, Brent has been leading the way. We talked about this weeks ago, and the fact that Brent was making new highs. They had some disruption, and that was making some new highs. We were looking for the WTI to have a little bit of a rubber band snapback to catch up, and now that's happened. So let's see what the next leg is, and keep an eye on the relationship between the two. But it is interesting that it has narrowed up as the global demand for oil itself has picked up both markets. Also in the news today was Iraq compliance. OPEC's second largest oil producer will comply. That's the news from their oil ministry. Came out, says they will comply with production cuts. Now, what's interesting is they're saying they're going to comply with production cuts, but if you look at the actual numbers, if you look at their average for 2017 on a monthly basis, their average was always above that production cap in 2017. So what they say and what they do are two different things, but they're coming out with some tough talk, and that could have been viewed as supportive. So for this week, let's watch the inventory numbers, obviously, but the dollar as well. We had that big dollar decline and the bounce back last week with the nonsense coming out of Washington, D.C., but if we can make some new lows in the dollar, take out that swing low that we made last week. We didn't quite do that here today or Friday, got close after that profit-taking round that we saw. If that happens, then we could see crude make another attempt on that 66 high. So keep an eye on that dollar. 65 is a support on a weekly basis to watch below. We had talked for many weeks, many months, that 65 was the upside target. Now we've achieved that. That should be a support level, maybe not on an intraday basis, but on a weekly level. Let's see if crude can hold above 65. So to summarize, today down a bit, down 50 cents, little profit taking, 65.60 March contract close.